Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, New York City, we have Michael Gronager. He's the co-founder and CEO of Chainalysis. We're going to take a look at Bitcoin market stability and why there are always more reasons to fight fraud. Michael, it's great to have you back with us at Market Site, and this is perfect timing for it, considering the move that we've seen in Bitcoin. And for those of you catching this on the replay, it's January 8th, because we have seen some significant moves. But the thing is, when it comes to mass adoption scams, they just continue to paint negative pictures around crypto.
Yeah, that's right. Yeah, thanks for inviting me here again. And definitely scam is a big thing. So one of the latest things we looked at was a Ponzi scheme, like a big scam called Plus Token. And Plus Token is like a more than $2 billion scam that happened in Asia, mainly out of China. So that is probably the biggest scam we ever seen, not only in crypto, but in general. So it's like more than a lot of customers end up buying the Plus Token and investing there on promises that they would get like huge returns. And then what happens is basically that the early ones would get a little bit of money to build out the scheme, and then suddenly, well, someone cashes out, and we saw that.
All right. I mean, I was reading through that. I mean, nearly $3 billion. What went wrong there? Was it a lack of oversight, which probably was part of it? I mean, the marketing of it, making promises like that on a security or asset is just...
Yeah, so it's completely unregulated right now. Well, right. It might be regulated, but it's at least like people are used to buy into schemes like that, and they were part of news groups and other things, and then they would see promises of huge returns. And as it's crypto, you can put them in anywhere. You can sell, you can buy different securities there, and as long as regulators are relatively slow at regulating these things, then this will happen.
Yeah, I mean, there was a rapid sell-off at one point in November. Do you think that those liquidations were a part of that, or was it technically driven or crowd-based?
So what happened there were basically that they tried to cash out their funds. So Plus Token has accumulated a lot of Bitcoin, a lot of Ethereum, and so on, and other cryptocurrencies. And then they started to cash out, basically get US dollars instead. And they did very big sells. They did them through OTC brokers. So meaning like someone who would typically make big orders, make big sell orders, make big buy orders. Mm-hmm. But sometimes if you get an offer to say like, hey, we actually want to liquidate this huge amount of cryptocurrency, and we are willing to pay a premium, then the OTC broker would go to an exchange, for example, Huobi in this case here, and then it would just dump the price, dump the Bitcoin there, and the price would crash at the same time. And we saw that, and we followed that. It basically made an analysis where we could see that the price decline were very well correlated with the dumping the funds on the different exchanges, and see that actually influenced the price.
It doesn't seem like there was a lot of coverage around this, though. You didn't hear, I mean,
not at the time.
At least in the US and financial media, we just kept hearing more about Bitcoin going through certain technical levels, or it was crowd thinking and everyone was selling as other traders were selling. This is a big deal.
It is a big deal, and also the fact that you could actually, an event like this in Asia, so it's in China, it's investors in China buying into a scam, and suddenly the scammers are cashing out, and that event alone would influence the market price all over the world. So it definitely shows that we need some regulation around like how the fund can move between exchanges in different jurisdictions, and an understanding of like how the price is being found.
All right, so what's being done to, obviously there's more reasons that we need to fight fraud. If you ever want to get mass adoption of cryptocurrency, what is the industry doing to make sure these things don't happen?
So I actually think that this example particularly is a very good example of things that works, but also things that we see on the way to maturing. So in the early days, so it would be an exchange directly. So it would be the scammers cashing out directly on an exchange. Mm-hmm. Now what happens in the different exchanges is that they got solutions from us, from some of our competitors, where they would be able to do proper compliance and use the inherent transparency in the blockchain to actually understand the origin of funds, understand the risk around the different transactions and so. So they're doing that. And a lot of the exchanges today, I would say most of them, are pretty good at doing that. Now we move to the next step. So customers of exchanges, for example, OTC brokers, they are now the victims, or sometimes they're the willing victims of like a money laundering scheme. So they would be a customer at the exchange, and then suddenly they would receive a lot of funds and dump them on the exchange. And when they're onboarded on the exchange, it might seem like a pretty good customer, but suddenly they figure out, oh, okay, I can actually sell all those Bitcoins at a high premium, so I'm going to do that. And now the exchanges need to move to what banks usually do, and understand the customer and the customer's customer, and look at the OTC brokers and say, hey, if you're doing this, you need to understand you need to have proper compliance and not just we cannot rely on our own anymore. We need to push it further on. So this is the next step, and that's like growing the maturity of the ecosystem.
Yeah, I mean, it sounds like there's just way too many exchanges. It's so fragmented.
Yes.
Oh.
Yeah.
All right, Michael, thank you as always for joining us at MarketSite.
Thank you.
And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.